So current draw was the session liquidity pools from Tuesday. We had London session low and Asian session low. Just ran out London session. I'm looking for, preferably, if we can go from Sellside to premium. We've got premium arrays in the 15-minute chart. This is also in premium. If you just want to take this larger dealing range, there's that one, and then even this dealing range. This is all in premium. So I'm watching the 8:30 15-minute candle. We do have slight SMT. If you take a look at this and then go to ES, ES has already taken out the Asian low. We do have this candle here. That would be, if we trade through it, bullish order block. If you zoom out a little bit, it's kind of hard to see, but we have a low, high, lower low, sub liquidity. You'd be using these 3 up closing candles as your breaker, but if you zoom out, it's probably a better breaker you could use, like this 3-minute breaker. So I'm going to be watching to see how this one's to potentially be traded through. We're not going to use it yet, but tiny fair value up forming in here. So when we have a breaker, you don't need to see it return into discount in this case. So as long as we close above this, we have a fair value gap order block there. I'd feel comfortable going long off this as long as there's SMT present. So we do have some SMT there. Still waiting for ES to climb through their breaker. Close above at least that swing high. True market structure shift. If you do use market structure shifts, there's 2 ways, I guess, that are high probability. One would be an intermediate term high. So when you have a gap that is filled and you leave a swing point, that can be seen as a true market structure shift. Or if you have a breaker, obviously, that's going to be your 2 high probability market structure shifts. It's not going to be just a random swing high or swing low. You're going to be looking for preferably a intermediate term high or low. So you're going to be finding one that fills a gap, something like this. Gap to the left. Also a low, high, high, low, higher, high. That'd be your last down closing candle. So that's your breaker. So as price tags it, you want to see it close through. But first indication, then obviously once we displace aggressively through that, then you have reasons to believe there's going to be market maker sell model. Same thing on the other side. 5-minute candle printed bullishly above the breaker. Looking good. We do have this tiny fair value gap in here. Now, if you were entering here on demo, this is now breaker. This fair value gap stop would have to go below the 721 low because we have the order block here, right? So, and it also lines up with the 3 candle fair value gap rule. So about 23 points. 1, 2, 3 creates the fair value gap, and then you're looking for the closest order block it's going to refer to, which is going to be this down closing candle. So you can put the stop below that entire thing. If you wanted to, you could put it all the way to the reversal. Looking good. It still looks like it wants to come down and fill this 1-minute gap. It's getting close to it. Now, if there's no entry, if you just like using the 1 minute as your entry point, there's no entry point, then you got to just sit it out. But there's the gap fill. But from here to where? Here's 42 points, and then up to the ERL, so the IRL, all the way up here is approximately 89 points. So more than enough for sure. Obviously, stop preferably would be below this candle, like I said previously, because we have to accommodate for the order block. But nice just wick doing the damage with the SMT now. Technically, there is going to be SMT across every single stage in the market maker model. So it's good to understand sometimes you get SMT in the second stage of distribution too, which is your silver bullet. And that's going to be your strongest entry. You want to also assume in a market maker model, there's going to be at least 1 stop run across the 3 stages of the MMXM after the smart money reversal. So if you remember, there's smart money reversal. We have your low risk buy in this case, your first stage of accumulation, second stage of accumulation, silver bullet. Now, normally between these 3, very rarely in the first stage of, in the silver bullet, in this one, do you get a stop run. That's why it's the quickest, easiest, the best trade to get in. But between the low risk buy and the first stage of distribution, most times you will get 1 stop run. So if you're aware of that and you can anticipate a stop run between here or here, after that stop run happens, there's a high probability fair value gap that occurs most times right after that, and you can get in. This is where you could either be looking at this as a stop run, or it's going to come down and take the stop. You want to see how we react to this order block. Last line of defense, I would say. Now, this swing high, to me, would complete a short-term market maker buy model. Original consolidation in here, drops, stop run, drops again. So the minor buy set up at the 901 high is at 17,329. We've now closed through the candle body of the order block. Swap liquidity one last time. So 3 stop runs there, 3 drive pattern with internal range on the low risk buy. Obviously, if you want to remain bullish, you have to see an aggressive close above the 958 bullish candle. Otherwise, all these up closing candle ranges are going to be used as a bearish order block. Starting to pop up. Now, since it's been choppy price action, a partial above here wouldn't be a bad idea. And above this short-term buy side, and then leaving runners all the way to the IRL, I think is best case scenario. This IRL you don't need. We'll just keep this one and then that one. Also, another 20-point opportunity. So if you want to take something off there. Now, from the entry point up to this buy side, 42 points. So past that is more than enough. This buy side really is all you would need. And we also have more high resistance as we climb further and further up into premium. But if you want to wait for just premium, take the 830 high to the 930-ish low. We have this swing point, which is first in premium. Flux you use, let's actually watch this buy side be taken. There you go. So 45 points, 42 points, sorry, done and dusted. So if we're sweeping out a 15-minute liquidity pool, we drop in the form of 1-minute gap. Sometimes that is another partial point. Close out last one there. We'll see it run up to the IRL, but that's in premium. So I'll send the screenshot over. If you got runners in demo, I would say a stop loss at break even, or even further up in break even, like below this 1009 candle is solid. That should be plenty in profit, also covering the order block and just slowly trailing it as we go up. But yeah, figure out, I think, just how you want to trade and what you want to trade. Write it down and then stick to it for 2 months, even 6 months. And you'll find so much more progress than you did when you just had it off the top of your head. There's your IRL hit. Can you go over the ATM model using today's example? Yeah. So going top down, we've got SMT between ES and NASDAQ, right? So I guess we'll go hourly chart first. So market maker sell model already completed with the session liquidity pools, right? We're not picking this random low. It's going to be session liquidity pools. So ERL sell side taken on ES. We have both the Asian session over here and London session from Tuesday. So that is your sell side, but there's also SMT present between there and there. Okay, so we only took out London session low at 9:30 and failed to take out Asian session low. So that is your bullish SMT. Then we want to go, okay, so if this is our bullish SMT between the sell side, you want to look for your 5-minute candle that prints bullishly after the 15-minute candle closure. Now with 8:30 news, you don't need it to be after 9:45 a lot of times. You can wait and just stick to the 18 model rules very strictly, or since you know that this technically is the kill zone start, you don't need it to finish the first 15-minute candle, but that just comes with experience. If you want to use it strictly how the model's written, then 5-minute candles print bullishly. You have your 950 candle here printing bullishly, so this is where you would be now hunting setups right after this 950 candle. Okay, then you want to drop into the 1 minute, look for a fair value gap in premium or discount or the breaker. So in this case, we have the fair value gap at 952. We get an entry point. Stop will go below here. Another entry point, all with the stop being protected. And then partial. Hopefully that made sense. And you can see the market maker buy model here on the 5-minute chart, which is what we were anticipating right from 9:30. And you can see right at 9:30, drops it with time, trades up, entry given within the macro time. And now the high is going to be formed around time. Think in power of 3. Your open, high, low, close is going to be time first. So open is not price. Open is a time. So time, price, time. Okay, so you're right, like your midnight open, your daily candle, that open does not start at a predetermined time, but rather, or a predetermined price, it starts at a time. So 9:30 open, price, time. You can even look at this as time as well. So on a bullish day, when it's just a normal day, 9:30 to 10 will create the low, and then your 10:30 to 11 will create the high. Flip this for a bearish day, but we'll just use the bullish examples for all these. Now for an 8:30 news day, you can shift. This is still true most times. I say most times because sometimes you can get the trend ending around 10 o'clock, but most times you'll still get this. But the one that you're more keen to looking for, I guess, the one that the news is going to follow most times is going to be, you shift this back. So 8:30 to 9 and 9:30 to 10. You just shift it back an hour. And if you look in here, bearish day, obviously, so high put in here at 8:30, this low. Now, if you don't know, what you can do is, here's 9 o'clock, right? If you don't know if this is going to be the low, if this is going to be the high, what you can do with the time is now, okay, if we are filling this gap, we're trading lower, and we break that low, that 853 low. So if you want to draw this out like this, right? And we break below that. Do you think that's going to be the low anymore? No, you would assume that this is going to be the high, and we're going to place a low between 9:30 and 10. So then you can look for a trade setup short. We don't even get one. Oh, there you go. Short that for value gap. And then you could just wait for 9:30. Obviously, it's hindsight bias in this case. Obviously, poor entry. But wait for 9:30. Get your whatever. Close it out. So the same framework there. Now, this is also sometimes true, where then if it creates the higher low, you kind of just want to drag this over. You get a higher low put in at 10 o'clock, 9:30 to 10, and then your low put in. Could be internal range, but open, high, low, close. So open, high, low, close. And it could either take out the 8:30, this 8:30 swing point, and have a full market maker style model. That's the easiest bread and butter 8:30 news profile. Or it could just return into internal range and put that at 10:30 to 11, which is what you got here. Okay, so the high put in here, low put in at 9:30, low put in 9:30, high put in at around 10:30 internal range.